Okay, this is lesson 5 in our series of $1 million in 7 years, and we're going to be going over the most active. So basically, the most active is the most volume. So all the stocks on the stock market, there are certain stocks that are going to have the most volume. So what we're looking at is taking all those stocks, not all of them, but 12, and we're going to make a list. This is our list for the rest of the month, and basically, let me show you how that works. So we're going to go to Uh-oh, didn't work there. Hold on, let me escape out of here. Okay, so what we ended up going to is FinViz. You all should be familiar with FinViz by now. But anyway, so we can go up here to the top. This is going to be very quick and easy. Um, right here where it says Signal, we can go down to Most Active. And basically, it's going to give us all the most active stocks. Now, you can go one more step, which would be screening for optionable and shortable stocks, which is going to give you the same exact list because most of the most active are going to be as you notice, not much changed. So at the beginning, the reason we want to do this at the end of the month because this is when funds, institutions, mutual funds, when they're closing out their positions, and then the following month. So it's like a four. They call it I call it 2 by 4. The last 2 trading days of the month, and then the first 4 trading days of the following month are the most active because basically they're closing positions and opening positions. And so this is the best time to actually do this particular strategy. So what we ended up doing was scanning for the most active. So you can see they're all in order, the highest volume. So 190 here with Bank of America, and you go all the way down. Now, if you want to fine tune this just a little bit, what we're actually able to do is go up here and where it says industry, we're going to say stocks only. So basically, it's taking all the ETFs out, like SPY and different ETFs such as that, and then now you just have just the stocks. You can see the list kind of changes, but basically this is just stocks. Another way you can do it is just having it with only ETFs. That works just as well, especially if that's all you're going to trade is ETFs. Now, what do we do with this list? You simply take the top 12, and we see we're going to end there with Pfizer. So now, once at the beginning of the month, it's just as you notice, if you can see my calendar down here, it's 11:30. So December 1st is tomorrow. So what we do here is we have all 12, and we just keep a list of those. Now, this is the theory behind it. While you're checking your stocks, you're looking for good buys, good stocks to trade, and everything else. What you're looking for is a stock that comes when you see a change in your list here from the 1 through 12. So, for example, let me go over here to page 3. I'm just going to pick a stock at random here. ABX Corporation, or here, ExxonMobil. It's number 43 on the list, and it has a volume about 22 million. So for it to move from 42 up to 11 and kick one of the ones out from the beginning of the month out of the list, it doesn't tell you that's a buy, it doesn't tell you it's a sell, it's just telling you that there's a lot of volume, and that is a stock you should pay attention to. So then you just click that and then do your analysis on that stock. So this is called the most active. I wish I could take credit for this, but this is basically was taken from Larry Williams, the famous trader, made $1 million in 1 year. And this is one of his basic ways of just looking for a particular stock because all of a sudden, as he puts it, somebody somewhere knows something. That is why that stock shot up to that list, and you just need to figure out if people know that this stock's going to drop like a rock or it's about to just take off. So again, that's basically our okay. So that is basically it with the lesson number 5. Basically, the most active. And of course, you want to do a simple call or put option with this because you're basically um, going after the increase, either it's going up or down. And let's see what else can I leave you with. That's basically it. So see you on the next lesson.